Hey, what's happening, everyone? Here comes the most profitable patterns you can find with TrendForce. So in this session, we just wrapped it up. Dad went through all of the most profitable patterns that our indicator fires out for us, what to look for right before the best moves. And so even during the session, myself, Vickers, and a few others, we were grabbing some pips during the session, breaking down some trades we had during the day. But otherwise, guys, get into this. Get your notepad out, get your eyeballs open, and start screenshotting these types of patterns. They're the ones that are going to show you and give you the most profits. So without further ado, we'll see you on the inside. Enjoy the session. Let's get into it. Welcome everyone. Tonight is going to be such an awesome evening. So cool to see so many of you live online with us right now. And for those of you watching this later, I guarantee you're in for a treat, so buckle up. We are getting into the profitable patterns that TrendForce fires out for us. And so Dad is ripping and roaring and ready to go. We are just over a week in, I suppose, now to everyone having version 4 in their hands. And the pips are coming in hot. And to quote Mark, he loves big pips and he will not lie. Anyway, there we go. You can't quite see him, but I can see him. So
yeah,
there you go. All the way over in the Netherlands, guys. Well, we're here for pips. We want to get pips, which for us who are traders equal dollars. So if you're in demo, you're still going to celebrate, but we are aiming for pips, which is how we measure one trade versus another. And so without further ado, before I start waffling in the wrong direction, Dad, I'm going to find you, pin you, and let's rip into tonight's training.
Here I am, coming through loud and clear. So there we go.
Nice. Sounding better and better and better. We got a mic upgrade on Dad's side, so enjoy. Let us know if you like the warmth and the better sounds of our T1. Tim.
T1, yep. No, this is, I feel really stupid, Mark said, I think one of our live analysis, my microphone wasn't so good and I changed it, I think, from my phone to the computer. Then Ty said to me at work today, don't you have like a microphone at home? And you remember, I got this nice Rode microphone I used during lockdowns, this beautiful one that gives great sound. And I plugged it in and the software was still on my computer. It worked first time. So hopefully I am coming through loud and clear.
Theory. Let's rip into it.
Yeah. So we're looking at patterns, looking for the golden setups, looking for what version 4 gives us. And Ty said it's only been a week or so. And it looks like, as Ty said, the pips are rolling in. I mean, what I like about version 4 is that it is way, way easier to read the charts. And there's a few extra things, although, the strategy hasn't changed, the rules haven't changed. There's certain things that become much clearer with version 4 that you couldn't see in version 3. So we're going to have a look at those. But remember, we keep often saying that you need to still understand price action, how price works, what it bounces off, key levels. There's no indicator that's going to beat knowing good price action. And we will do a session on that, looking at the key levels again. I've learned a bit more while I've been doing research, doing version 4. But we're going to jump straight in. So I'm going to go to share my screen here. And hopefully this is the one. And whenever I do that, I'm just going to move a few things around. Your beautiful faces. There we go. And it's great to have you all with us. And I'll just let Ty keep an eye on the questions. I often quote Tony Robbins, I think I've said it a few times the last few weeks, that we watched, Sing and I, my wife, we did a course with Tony Robbins, and he said, if you see a pattern in the market, you will make money. And so I have some declarations I do every day, and one of them is, I see patterns that make me prosper. And trading really is about patterns. If you can identify patterns in the market, you definitely will become a successful and profitable trader. And so what version 4 does, it really makes patterns, way more clearer, I believe, and easier to interpret. I'm just looking at the NASDAQ with another all-time high. Look at this. You can see it's printing over. It always will, by the way. Hopefully you can see on the Zoom. You can see the dashed purple lines over the top of this resistance line. Another all-time high. So we're going to look at patterns. What we call, the golden pattern, or the golden setup, is the one thing to keep an eye open for. So I've already found 2. Now, I'll say this more than once tonight, that these don't come all the time. So, if trading was easy and we got these golden setups, every day, every hour, we'd all be extremely wealthy. They don't come very often, but it's important that we recognize them. So when they do come, we're ready to press the button and enter good trades. And so I'm going to go straight. I've already teed up a date here for one. We're going to look at one on the NAS. I think I've got the right one here. So let's look at this. So this is what we call a real golden setup. So if you see this pattern, obviously this is a sell. And remember how, I covered this, but I'll say it again, how the sell signal generates is that there's got to be separation, a bearish separation between our 13 and 21. And at the same time, there's got to be separation on the MACD. It's just amazing when we were putting this indicator together. I was chatting with Ty today, just how often that happens. And generally, this comes a bar before or at the same time. So the MACD, we love, gives us great indications of momentum and trend. And so that's how the signal is plotted. We get separation there, separation there. Then if it's bright red, that already fulfills rule number 1, which is TAS, our trend zones. They've got to be aligned on the current time frame and 3 time frames high. So I'm on the NAS, you can see here I'm on the 3 minute. It's bright because not only are we aligned on the 3 minute, 3 times higher, we can see here on the trend zone, bearish on the MACD, it's already red. And so this is a great pattern. When you see this pattern, press the button, because we can see all 6 zones. So we got obviously 3 trend zones in the main indicator. We got the current one, the main trading zone, then 3 times higher, 8 times higher. Then the same on the MACD. We got the current zone, then 3 times and 8 times. So this is the kind of signal you need to look out for when you've got all 6 zones in alignment. All right, so this is what you'd look at, this pattern. If you can identify that pattern and see all of those 6 zones lining up, price drops. So in this case, from that sell signal, price dropped right down to the bottom, there was 200 pips, but up to that candle, there was 200 pips in that trade. So you'll find that when these zones line up, there's always big moves. Now, this is almost second best. What's even better than this pattern is if these 2, the 3 and the 8, and also this one were above 0, that is even better. But nevertheless, they're below 0, but they're still completely aligned. So keep an eye out for that pattern. When you have 6 zones aligning, price is going to move. Then if we just look at one on the Dow, a buy. So if we just go to the Dow, and I made a record, there was one on, I just made a note here, Saturday, 11 October. Wow, look at that. So let's go Saturday, 11 October. We'll just have a look at that one quickly. So 11 October. And that one was, I think, in the morning. There was a 2:15 in the morning. So let's just go back. Now, there was a big move afterwards. So initially, the screen looked a bit distorted, but I'll sort it out. So let's just look at that buy signal. Now, you can see here, price fell. There was a sell that fell 600 pips after this massive sell signal. So that's obviously blown our MACD out the water a bit. But here's another good example of, again, trending in all 6 trend zones. So we can see here we got a buy signal. It's bright because not only are we aligned, not only do we have a crossover in the main zone, but also 3 times higher. We can see we've got this bullish green MACD trend zone too. So that's what you'll look at too for buy signals, that we got all 6 lined up. Now, again, it doesn't happen often, so I'm going to look at ones that don't line up, but where there are pips that you can identify using version 4. But remember, keep an eye out for these. When they're all zoned and lined up, all 6, that's a beautiful signal. I love this buy signal over here. I want to see, let me see, where was that counter trend? Okay, it wasn't, that was on the NAS. We'll come back to that later. All right, so then I want to talk about a few other things now. So let's just go to our current time. We're on the Dow. I'm on the 3 minute. Let's get my chart back up there. And here we go. This is the Dow. So not everything always lines up. And I want to say, first of all, I'm going to come and talk about these gaps that can make trading risky and how to get around them. But the later we enter a trade, the riskier it becomes. So I think we understand that. We trade with trend, but obviously price, if we, for example, this has been a big bullish move up from this morning. When price is moving up, the later we enter from the start of the move, the riskier a trade becomes. If we can get in at the bottom, then obviously it's safer. And there are 2 ways to measure that. So this is a very good example. So if we look at this move that really started, just after 1:30 or so, we began this huge up move. It peaked here. What time was that? Around exactly midnight. We kind of reached the low, price moving down. And then we had this huge move up. Hundreds of pips from So let's just say right from the first signs of bullish momentum, we got buy momentum there. I mean, there was almost 500 pips in that move. So when we start taking signals, I'll look at some examples on the one. The further we, now here's a buy signal. I mean, I took that this morning, but there was some risk with that. I'll come back and tell you why I still took it. When we get signals that are far away from the bottom, it becomes risky. So if you think about it, where's the bottom of this move? Well, we can say it peaked down there, but also the MACD does help us. So remember, we do reference the 8 a lot. And when they line up, like I showed you, that's really key. But 3 times higher is enough for safe trades with our strategy. So we can see this, the 3 trend zone, 3 times higher, bottomed out at 5 to 1. But if you look how good the MACD is, if we look at the 8, where really was the bottom, and I couldn't believe how far to stroll back. If we go back to where the 8 crossed over, this bullish crossover was way back on Friday. You can say just 11 o'clock at night was where it crossed over. From Friday, 11 o'clock at night, the MACD stayed bearish all the way until it obviously turned around. When did it turn around? Somewhere up here. There's a circle in the middle of there. It became bearish. So that's how we look back. So when I'm looking at a move entering, I'm always thinking, where did this move start? How far away am I? And then it's great to use the MACD. Look at the crossovers on the 3 and the 8. And so the key is, so what I'm saying is, the further away we are from the move, the riskier it gets. And also, this is the key tonight. We've identified a good pattern, but what happened if the stars aren't aligning? So for example, here we're pretty close on this buy signal. We aligned nicely in the main indicator. So we can see we got all 3 are aligning nicely. The problem is here we have got a pullback in the 3-minute. Now, I said this the other night, so some things we want to drill in because some of these things are new. We want to make sure you hear them more than once. This main indicator always bullies the MACD. So if you're in doubt, the way we have this strategy of the 1, current, 3 and 8 is very, very strong. So if there's any doubt, look at the main indicator. That will be slightly more stronger than the MACD. But having said that, I'll try not to wrestle against the MACD. So with this particular buy signal, I took the signal this morning. We can see it's not bright. We've crossed over on the current zone. We've crossed over on the MACD. That's what produced the buy signal, but it's not bright. And the reason it's not bright is because the 3 times higher MACD was bearish. You can see that it was in a pullback mode and it's gone red. There was a bearish crossover over there. But then what we're trying to drill into with the strategy is that higher timeframes do bully low timeframes. So although the 3-minute for the signal was bearish, we can see how strong this MACD is over here. The 8 times higher is way stronger. Oh, sorry, I made a mistake. I see there was the crossover there. All right, so this is this will bully the 3-minute, and this happens quite a lot. So quite often, you're going to get a dark signal because 3 times higher doesn't align. But if you look at 8 times higher, which is clearly in a wonderful bullish pattern, then that will give precedence, and then it becomes safe to take the signal. Now we'll go to the 1-minute in the meanwhile. So once you get this kind of separation, I'll come back to it in a minute, it becomes risky to take signals unless, and this is what we're going to look at tonight for quite a bit, unless it pulls back into a previous zone. So there were 2 reasons. Normally, I'd be nervous about taking a signal that's quite far away from the source, and when there's a lot of separation between the 3 and the 8. But 2 things made me take this. The main thing was we pulled back. And I'll show you some good examples. We're just going to pick them at random. I haven't planned them out. We'll just look back. Whenever price pulls back into a trend zone, it always gives it energy. So I said this, I think, when we did the main training night, is that not only are these trend zones, they're also liquidity zones. So what made this buy safe is that this pullback, you can see here, went right into the 3 times higher trend zone. So that made me think this is going to be good. But of course, there's never, looking at price action, we can see there was a great trend line here. I love it when you get 4 joins. So you can see right at the top, we got 2 touches there, 2 touches there. And from this pullback, price, there wasn't quite some kind of head and shoulders pattern there, but it was close. but you can see price on the signal, price broke. That's what I like about TrendForce. A lot of the times our signals, even this buyer momentum showing buyers are pushing price up, there's seller momentum. Sellers try to push price down, buyers jumped in, pushed it up. But having a signal on the break of a trend line is always good. So this is the key. We're going to look at some examples now. So the point I'm making is that it's risky when there's a lot of separation. So if we, for example, okay, let's look at the 3 minute, then we look at some 1 minute examples. So there's some good ones on Saturday. I was at a men's breakfast. I was just looking. So let me take that. But look over here. Can you see this? There's quite a bit of separation between the 3 and the 8. But if you look at this buy signal, there are a lot of things. I love looking at price action. There are a number of things that make this a very, very good trade. Now, again, I want to say we can see here the signal is dark green because we're lined up for the 1. We wouldn't get a signal unless we had crossover in our main trend zone. We've crossed over also in our MACD, but it's not bright because 3 times higher is in a pullback. And I've noticed this happens a lot. So don't not take a trade if it's a dark signal, if the 8 is still in bullish mode. So in this case, we can see 8 times higher is still very bullish. So that would have still made that a safe trade. But there's other things to look at. We can see here, price has pulled back. So again, the point I'm making is we haven't got all 6 zones aligned nicely. This has let us down here. But what makes it safe is when it pulls back. So with version 4, you couldn't really see in version 3. If this was version 3, like the 55 would have been over here. They would have seemed insignificant. You may have stayed out the trade. I remember we had a 55 EMA instead of these 2 zones. But with these zones, they give us a lot of information. So we can see price pull back into the 8. And it can pull back into the 3. We'll look at some examples. But when it pulls back into the 8, that means it's going, 8 zones higher than your current time frame, which means there's even more liquidity. So if you look at this buy signal, this was at 5 to 7. If I wasn't at a men's breakfast, there was 156 pips up to there. Would have been a great trade to take. You can probably see price action. Can you see this W pattern? Made a nice double bottom. And I think had this also. There was this trend line break, and I love it how often with our strategy, when you get a signal on a trend line break, go for those ones because they always tend to move. So again, we dipped in twice, made a double bottom, and up we went. We can see here too. Here again, we got a similar pattern, not as pretty, but we got a double bottom. But again, price has pulled way back into 8 trend zones higher than the current time frame. So this is equivalent. We're on a 3 minute here. So this is, in a sense, a 24 minute, which you could basically say a half an hour. So prices pull back into the half an hour zone. And again, the higher the time frame it pulls back into, the higher the liquidity. And I pointed this out to Ty. What you will notice is that, now I don't want you to break the rules, wait for the signals, but when you get more skilled and you understand price action, often when price pulls back into a higher zone, a higher time zone, like 8 times higher, price almost ignores the zones that are higher. So we can see here, we had the current time zone was bearish, 3 times higher was bearish. But if you look at these candles, can you see from this double bottom, break of a trend line again, the candles did not pull back. You can see these beautiful, that's why I like Hakanashi, beautiful bullish candles, flat bottoms, no pullbacks. There were even no dojis. And that is the power. You'll see that pattern over and over. When price pulls back into a higher trend zone, it moves up. Now, it's not always obvious on the 3 minute, but even over here, look, this pulls back 3 times higher. That candle, it doesn't look a lot, but remember, this is a 3 minute chart. I mean, there was 83 pips there. This again, pull back. You could almost call that a double bottom. It pulled back, double 2 candle wicks, bearish wicks, and then from that triangle, that wick, they pulled up 134 pips. So these are huge moves. So whenever it gets liquidity, then that becomes safe. And even with counter trend, this is one I wanted to look at. So obviously counter trend, we're going to do a session on that. But this is a good counter trend signal. We're not going to get too distracted, but Can you see this is bright green? Because not only is it aligned in the current, but 3 times higher MACD is already bullish. So with this one, this is particularly strong. So if you see, so it's not quite a golden setup, because the 8, and you won't always get with counter trends, the 8 times higher linking up. But look at this, we can see here that 3 times higher, 8 times higher is crossed over. We get a counter trend signal, but what makes this exceptionally strong is, can you see how price pulled back into 3 time frames higher? So it pulled back here, got liquidity, and then moved up. And so if we just go to the 1 minute, today's a good example. I'll show you risky trades where we got buy signals on the 1 minute this morning that were risky. So look at these nice signals. These are all nice signals going off there. So let's just go to this morning on the 1 minute. So here we go. So if we look here, these signals become more risky. So can you see we're on the 1 minute way away from the bottom of the move? And here we've got a buy signal. Now, obviously, we're in a massive uptrend here. But can you see what the problem is? This pullback to me wasn't enough. It didn't quite come back to 3 trend zones lower. So we're on the 1 minute chart. And so we got a buy signal here. And it wasn't a big trade. To be honest, I took this one. It was a bit of a risk. And I didn't get to the top. I followed up and I made some pips, but it was risky. It broke a trend line, and that's why I took it. But these become more risky because they're not pulling back enough. This one too, you can see. So when you get separation, a lot of separation, and it's late in the trade, and these signals, you don't get a pullback into the zone below, they don't tend to move much, and they tend to pull back. And so it's almost a form of divergence. So I would maybe call it, TrendForce divergence, is when you start getting these gaps developing here. You can see there's big gaps between the zones. It looks like it's trending, but it's a form of divergence. Divergence is when, for bearish divergence, is when price is increasing, but momentum is decreasing. And when you start getting this kind of separation, that is, in a sense, is a form of divergence. Price is increasing, but momentum is decreasing. These gaps are getting bigger and bigger. So remember, price always returns to the average. So if we just pick this buy signal, for example, 638. Now remember, this is 3 times high. We're on the 1 minute. So this is the equivalent of a 3 minute. This is the equivalent of an 8 minute. So if we took this buy signal there and we measured down to the bottom of the 8, can you see this is now, this bottom of this 8 would be the equivalent. We'll have a look at an 8 minute chart. This is now 100 pips above the 21 on the 8 minute, which is a massive gap. That's how much price has pulled up above the 21. So I think I've got the 8 minute here. So if we go to, what did I say? 738. So let's just draw a line here, 738. And Tars taught me well. I've got to be on the line, sync globally. We can see if we measured now, this is the 8 minute. Now remember, it's 8 minute is a bigger chart. If we took the top of that candle down to the 21, we can see there exactly 100 pips. So that distance let's look at my measure, from the top of my candle on the 8 minute down to the 21 is 100 pips. So it's that same distance from there down to that level there, because remember, these zones mimic exactly, well, the 1 minute, the high time frame. So you're taking a signal, and remember, we're looking at high time frames. Let me delete that now. We're looking at higher time frames to get confirmation of the trend. But again, when we are pulling so high above these zones, the trades become more risky. So what you want to do is try and enter trades where you are closer, the zones are more compressed. And so there are 2 questions that I'll answer both of them at the same time. So Mark asked a question from this morning about why wasn't there a signal at whatever it was, 1:30. Let's just go back there. So that was a good question. So there was no signal here, and I just reminded him. So round about here, there was no signal. Round was at 1:22. And the reason was because when the main trend zone crossed over, the MACD just hadn't, it was out by 1 pip. So sometimes it will happen. Generally, the way we've set everything is that generally the MACD crosses over before the main trend zone crosses over, but occasionally it lags slightly and you don't get a signal. I mean, that would have been obviously a great buy signal, but then remember there are a lot of other signals you can look at. So if you don't get a buy signal and it looks pretty obvious, like if you can see here, I mean, the MACD was trending nicely, bearish. The 8 hadn't quite crossed over, but it was still, in line with the 3. So then you can look at buy momentum. Also, it's not so clear, but you can see the first bar, the histogram went bright green. But of course, we looked also to our trend table. But again, what made this one, now Mark would have known this, we're only really teaching it for the first time tonight. What would have made this signal an entry point good down here is that you can see our prices pulled back into the 3, and it may not be clear, but it's also pulled back into the 8. It's compressed, and that's what I wanted to also touch on, is when the zones compress and they're close together, that always springs price up. So how this trade was kind of birthed, this big move up, and we can see on the 1 minute, I mean, from that buy momentum signal, I mean, that went up, 90 pips. That would have been a great trade. But compression is good when the zones compress. So we can see right here, I'll just measure. The compression here was only, look at that, only 6 pips. I mean, price, 3 trend zones had compressed into 6 pips. If you think about the opposite extreme, if we go back, let me just take off the 8. Look at that buy signal we looked at later in the day. Where were we over here? If you look at these buy signals here, if you look at the trend zones, they were spaced 85 pips apart. So be looking for the compression. So it's something new we're kind of looking at tonight. Look for compressions of the zones. When the zones compress, especially all 3, that is massive. And there's a reason these become very safe. You can see here, may not be too clear on the zoom because the gray is under the green. But price pivoted off. It pivoted off the bottom. So this would be the 21 and the 3 minute. So price didn't break below the 3 minute. And then also price didn't close the 21 on the 3 minute. It didn't close below the 21 on the 8 minute either. So when you get compression like this, you've got to think that you've actually got, with a bullish run, you've got 3 zones of support. So for price to reverse now, after that signal, it would have to break through the current trend zone. It would have to break through 3 time frames higher and break through 8 time frames higher. So these become massive for entry. So these are the safe places they do when you see compression like that. And then Jordash asked the question also about range. I'm trying to think, I had an example, I've forgotten where I looked. But when these zones also compress in range, so when you see this kind of look where things are getting rangy, this is not a lot of range, that can be good. So when they compress, it can be a sign of range, or it can also be compression, but generally range always leads to breakout. So when you see like this kind of movement here, eventually there's going to be a breakout. So, I mean, you could have measured this range if I never get these boxes right, but if we just draw like a little range box here, so maybe that was your range box there, you can see price was in between. Then you can always take a breakout, could be a safe entry when you break above that high over there. So look for this compression. Let's just look at a few other examples. I'll just delete that. If we just flick back and let's just we'll find some good examples. Let's go back to the 3 minute. We'll see more examples. We'll cover more ground quickly. So this was also, let's just have a look here. We'll just flick back. Here's an example here. So we can see this is a good example. So yeah, we went a little bit rangy. So this was yesterday afternoon, but you can see when price So we had this bit of a counter trend move up, price came down, and we can see this is what I'm looking for. We can see we enter into a bit of range here, but you can see what's happening. Price is broken back into 3 time frames higher. So there was a bullish run up. We had a crossover on the current time frame, which is a 3-minute. But you can see price couldn't break below because it's now pulled back into a 3 times higher bullish trend zone. And so it's broken, it's going sideways because remember there's liquidity here. So what we've got in these zones, we've got bullish liquidity. And so eventually we can see, again, it may not be so clear, but price twice hits the 8-minute. Although it went a bit bearish, there still are strong support here. And after that, although this is normally a quiet time of the day, we can see there was still quite a move. We get a bright buy signal and price moved up. How much is that? 100 pips. So again, there's kind of range, but there's also compression taking place. So you see this time and time again. So let's have another look. Here's another example. Here's another great example. Did we look at this one earlier? I think we did. So let's just go back. We're just going to look at random examples of how price may compress. Here's another one here. Look. So we're not fully aligned. The 8's not aligned, but look here. This is a great. So this is where this indicator is good. Is we can see here. Look at the MACD. We are bearish 3 times higher. We got a bearish trend zone 8 time frames higher. We got a nice bearish trend zone. So we have this counter trend move up. Obviously hits the 8, it comes down, but look here. It spends a lot of time in range inside this bullish zone, getting liquidity. Now, obviously it had to break through this, not ideal, but you can see when this happens and price pulls back, gets liquidity inside a zone higher, when you get your signal, we would have expected a pullback because we weren't quite aligned, but look, this MACD is nicely aligned. That trade went up how many pips? Gee, 324 pips, massive. We looked at that signal, we looked at the equivalent of the Dow. We didn't look at this signal, almost a golden setup, but we hadn't quite crossed over yet on the 8. But you can see what makes this good, this signal very strong, is price pulls back and it gets liquidity inside 3 time frames higher. So the safest signals always come when we pull back into a zone 3 times higher. Now there's an example where a sell, there was a false signal, but again, look, a pullback into the zone, didn't get to the 8, it tests the zone 3 times higher, after that it falls. So we keep seeing this pattern repeating over and over. And so here's another good example. This one we just missed this one because we're looking at gold. This was on Friday morning in a live session. We're looking at gold when this one pinged off. But again, we can see we're in a wonderful bearish pattern. Price pulls back and it pulls back into 3 time frames high, gets liquidity, and after that it moves down. So I probably made my point, but keep looking for those patterns. Here's another great example. Look at this here, where price, we have a little uptrend, price pulls back, and look, it goes into 8 time frames higher, can't break below. So this bottom line, remember, is the 21 SMA, 8 time frames higher, 3 times it tested. So that's 9 minutes of testing. It breaks out, and then this is another good example. I mean, that went up 64 pips. But you can see here how lower time frames bully high time frames. It pulls back into 8 time frames higher. Can you see those candles? Beautiful flat bottoms, no pullbacks, up price goes. So it's going through a bearish zone with hardly any pullback because this high time frame is bullying. So 8 times is bullying the current time frame. So you look for those patterns. I encourage you, if you got free time, if you got free time, scroll back and look for how price moves. So here we can see that I can recognize this is the open. So obviously it's a bit risky, but here, look at this. Here's an example, makes a double, price moves up, comes down, retests, gets right into 8 time frames higher. We got our bearish doji bullish pattern. That would have opened low, but their price goes up 100 pips. So this is continually repeated. So here we can see even with counter trends, it's getting liquidity all the time. So keep an eye out for those patterns and look for compression. Let's just go one back, see what else we can look at. I think we've probably done enough of that. I'm just trying to see. There was a counter trend. Anyway, I think I've made the point. Are there any questions, Ty? Does compression...
Oh, there's a few. Where are you up to? What was the last one you read? Did you read any, or you want me to start from where they are?
Okay. Okay, let me start from the bottom and move up. So, Marcus, how would you treat the current... Oops, someone's just asked. How would you treat the current 3-minute chart? 8-time MACD being strongly down when looking at a 1-minute chart. The current, as you mean what the chart we're on now? Not sure I'm understanding let me just get the chart back. So how would you treat the current 3-minute chart? 8 times MACD being strongly down when looking at a 1-minute chart. Gee, I don't know if I can figure that question out. So do I need to look at, let me just split it and make this 1 minute. And this will make, let's put it in the 3-minute. So I mean, basically you normally just like stick to one chart. So I'm not sure if I'm understanding the question.
I think at one point, Marcus did notice that we were based on the 3-minute and we were looking at like 8 times higher. So I mean, it really just is the same logic. No matter what your base chart is, whether you trade from the 1 or from the 3, whatever that 3 or whatever that 8 times higher band is doing, it's still going to be exactly the same rules and logic. I'm just trying to dissect the question a little bit more. I think I know what you mean though. Like if you're on a 3-minute chart and those higher ones are starting to fall over, then the lower chart, because you could go lower, if you're based on a 3-minute, you can obviously go down to the 1.
Yeah.
And let me just check. I think you just clarified it. NAS 3-minute as a strong 8 times MACD going down, but 1 minute looks to be rolling over. Okay, so is that right now? Dad, you want to jump to the NAS? Because then we might be able to actually take...
Okay, let's go. Let's have a look at that.
So NAS 3-minute. So
NAS, I'll go to the 3-minute.
Has a strong 8 times MACD going down. Yep. So that you can see the gray zone in the MACD is cutting down.
Yep.
And the 1 minute looks to be rolling over, as in the 1 minute's rolling up. So you would say, so obviously this is what happens. So higher time frames bully lower time frames, but giant reversals start on the lower time frames. So that's going to be highly contradicting. But where does the reversal start? Well, it doesn't start on a daily chart necessarily. The first pip that you're going to notice turning around, you'll see on a 1 minute candle. So that is the hardest thing, is when you're trending in a direction, the higher time frames are going to bully those lower ones on trend. But when things do finally turn around, you're going to notice they're going to start folding. Like if you picture all the moving averages rolling down together, then they're all going to start, the first ones to bend up another direction, obviously going to be the 1, then the 3, then the 5, then the 8, and the 15, etc. So I hope I'm kind of bringing some clarity. I talked about this at the last live event a little bit. But in this case, then, I mean, Dad, you can comment on that. It's like, it's hard to know the bottom or the exact top. It's having a few other things in your favor. So for me, like I was looking at this earlier today on gold. I'm trying to think. I remember seeing this pattern. It was probably today, but it was. I saw that things were pushing up, but the 1 minute MACD was getting real tired. Like there were like 3 little tiny bumps in the histogram, and so everything is pushing up, but it's running out of energy. Just lots of divergence. The MACD is looking exhausted, and that's pretty much what's been happening here. Like prices in the other direction, price has been falling down, but as you get lower down the move, you can see where the CT signal fired, you got separation in your main trend zone. So that main trading trend zone above the lightning bolt there where Dad's cursor is widening. Then price pulls back to it and it starts to compress, breaks away, rejects the zone, it widens, comes back to the zone, compresses, rejects the zone, expands. And at the bottom, when you start to cross over, like now price is crossing above the main trend zone, dipping into the red zone there before the sell signal, just to the left where the POC is, then left at with the first touch of the red zone. Like now you've got a pullback that's getting into those other zones. The MACD's already crossed over before that. So you can see the 1 minute, the 3 minute, the current time frame MACD, because we're looking at a 3 minute, the MACD for this time frame crossed over way left, Dad. You can see pretty much at the white candle doji. Like look for the MACD crossover, like where it turned to blue, further left. There. Like that's where the MACD, I mean, it actually did a little bit of a crossover earlier on in the midst of the pullbacks, but that's when it started to cross over and hold some separation for a while. But obviously the histogram is still bright red. So it's coming up closer towards zero there. That helps a little bit more. And then, it crosses back down briefly, crosses back up. It's still below zero, which is something to think about. I really still give a lot of weight to if all of these zones in the MACD are above or below the midpoint, the zero line, which is basically the horizontal middle of the MACD. Some would say if you're above it, you're in bullish mode. If you're below it, you're in bearish mode. So I don't know if I'm answering your question accurately, but I'm just kind of talking through what I see when I look at a MACD. It's going to start looking more and more tired. The separation is going to start going away. And now you can see the 3 times frames higher MACD has got a circle. We've crossed over there. So things are starting to turn around. Obviously, the existing time frame MACD turned first. Then we get that green circle on the 3 times higher MACD. And that 8 times is just looking like it wants to, spoil the reversal party and keep everyone on trend. So that's the hard part. That usually means we've had a bit of a run, probably going to have some range, because now those MACDs are telling very different stories. They're kind of colliding in the middle, and that's when you're most likely probably going to get some frustration and range. If you think about what the beautiful pattern looks like, when they're all stacking and they're all starting to fall off a cliff together, or they're all about to head up to the moon together, that's the beauty zone. But this is we've had a move, and now things are starting to collide in the middle, and you're most likely going to start getting range. And the only other way to bake that into your brain is go find some range and look at what the MACD looks like, and you'll start to see that a little bit more clearly. And that is not usually the beautiful moment to be entering a trade. You need to wait for a bit of range to play out and something, either some obvious recorrecting of trends. I mean, right now this would be a very risky point to enter necessarily. I mean, you got one sell signal.
Table. There's more
you got a
green
Christmas
than red.
tree, and you're going sideways, and there isn't really. I mean, you're approaching potentially a triple bottom, like head and shoulders, reverse head and shoulders, for a potential move up eventually. But it looks like it wants to range a bit longer. So hopefully that's helping a bit. We're probably going to get spin-off questions from that now without going to the top of the question box. Okay, Mark said helpful. Awesome. That's cool. Joseph, we'll come back to yours and we'll work our way, because we've got questions hanging up the top. And if we start on, we'll work our way through them all. Marcus said, 1 minute looks quite positive for a shift up, but the high time frame MACD does look like a party spoiler. Yeah, exactly. So that 8 minute MACD is still very much, coming down with some width, so to speak. If it was starting to compress a lot, that would be different. But if it's still pretty thick, then did you just jump to a 1 hour on the same?
Yeah, this is the 1 minute now.
Okay, so now you can see the
range.
Now you're seeing how long the range is. I mean, what is that? That's like an hour and a half, 2 hours? No, hour and a half-ish.
From 6:30 to, yep.
Yeah, so that paints a much better picture.
2 hours of range now, really, from...
Yeah, so that, there you go. That's when you start to bottom out like that, when the MACDs, you can see the 3 time frames high MACD is just a circle party there in the middle. It's flicking in between. That's where like your 3 time frames higher histogram can come in handy. Like if I'm on the 1, I'm paying attention to that 3 because that'll hold its color quite well. Then I know like if this thing's got a little bit more gas in the tank. But if you get a color shift in your histogram 3 time frames higher, that then can be a bit of an indication that things are starting to pull back with a bit more aggression. Okay, let's roll up because Marcus said, I hesitated on the CT earlier, but it was a great signal on the 233 break and trend line break. Okay, so you're talking still the NAS, so that would have been higher.
I've taken off the. I've taken off.
It'll be just below the 8 time frames higher in theory if my math is on. Okay, there we go. Yeah, so that's where your counter trend trades are that's normally going to be almost your target, right? So you're going to get a counter trend signal only if you're on the wrong side of the 233, and that is usually one of your safest targets. If, for instance, there you can break through that 8 times higher. So MACD was in your favor, all 3 of them, they were good. And those usually move. I mean, you've had a trend line break already, and then a little bit of initial break, a little bit of a pullback, bright CT signal. You've got a zone in the way and probably another line, like a resistance line or something. But these are the riskier ones, guaranteed. Like they just are. And price could bounce off anything. If you've got a great win rate, go for them. If you don't have a great win rate, just forget about counter trend signals and work on improving your overall win rate. Hope that helps a bit.
But having said that,
4:37 p.m. Oh yeah, that's that one. Yeah.
What is good about this, when you see a counter trend signal and the MACD is like got this amount of alignment, that's very good.
That's your early rollover indication. You're seeing those MACDs are already, the 1 minute's kind of hopping through zero. There's already some separation for a little while. 3 minutes starting to separate. The 8 minutes in agreement, like that MACD right there tells me this could drop. If you expanded it a bit more, it might look a little bit better. And it would depend on the table at the time too, but naturally counter trend, you're going to have a little bit more in the way. But yeah, man, safety, when in doubt, stay out. Like that's the thing. You need to have some certainty and see the same things over and over again to feel confident to take it. Otherwise, yeah, you will take a knock. And if that's the all-time high just above there, that would, that's also another layer of riskier territory, depending on how fresh it is and the session and different highs and lows and all that coming into play. But yeah, okay, lot on that. Let's roll to the top and figure out okay, thanks for that. That was helpful. Awesome. Cool. Up to the top. And guys, amazing turnout tonight. Really cool to see so many of you on here with us tonight.
5 minute counter trend signal popping off there.
Oh, there we go. So it's all dropping. Shout out to my man Vic, as we both took some pips on gold earlier while you were chatting away, Dad. We were listening intently, but just
no, you're going to keep in extra
scoring some pips on the board as well. Here we go. We're getting emojis flying into the Zoom and everything. I love it. Okay, so I'm going to roll to the top and see where we were with questions. I think I answered a couple of them while we were going, but I think Mike had a good one. I'm trying to find it. Like for instance, let me just see, it didn't hit the TP3. How do you handle signals that go a bit but don't reach TPs? So I guess you're asking a bit of a trade management kind of a question in there. Like why, like for instance, that you had one this morning that didn't exactly fly. How are you approaching that trade? What caused you to exit? Without getting too lost in how we each decide to move our stop losses or cancel or close the trade, etc. You can probably comment on that, because I doubt that one. Maybe I don't know if it hit TP3. It didn't look very big. It just depends on how squashed it was before it fired.
Which one? The 1 minute one I took.
The one you took this morning. The buy you.
Because it was risky. I immediately got into break even, and so it would have looked almost exactly like this. So I really I chased it right up, and then I made sort of 10 pips or something. Not a lot on that one, but I just really chased it up straight away because it was risky. So I didn't want to make a loss. I didn't want to get stopped out. I just followed it up. And then the first pullback, I got stopped out, which I was happy with. Is what it is.
Yeah, that's good. So following it up, for those of you guys that are new, like this is why high Kanashi candles are also super helpful. You can move, your stop to the base of the high Kanashi candle if it's a flat bottom. And then at the same time, I often will look, if I want to give a bit more of a cushion, I will look at the 3 times frames higher as my base and give a little bit more of a cushion that way. Like if you're feeling like it's not, like for instance, getting a signal and it hasn't pulled back enough, so to speak, and grabbed a bunch of liquidity, you probably want to get that thing to break even quicker and again, it depends on your win rate, depends how often you get hit with those kinds of things. But if the goal is to improve how you're managing certain trades in certain airspace, then yeah, trailing it can be helpful. It's annoying if you get knocked out by 1 wick and then the thing goes without you, and that's where each of us have to kind of come to our own approach, where we either just leave that stop where it is when we move it to break even, or if we start trailing the thing, or, Dad likes to move that TP down. Like that trade I just took on gold, I said, I'm not managing this thing like crazy. I just dragged my TP to the teal 2584 and just moved my stop just into profit. And look, once I had a little bit of a cushion, and I just let it run. Like I had it on the right-hand side of my screen, but I just watched.
Let's look at it quickly, Ty. So here we go, gold.
Yeah.
What time frame did you trade on the 1 minute?
1, but I am still watching all of them. I've got still the 1, 3, and 8. So that's the 3. So if you go to the 1.
So you go to the 1, yep.
So we'll see teal down somewhere where it is now. So
there we go,
it started to roll, and we were underneath the 987 and the 233. I was watching it a little earlier, just as it was just as it was breaking into the 233, kind of just after Dad started talking. I thought, no, I'm not getting suckered into this. This could kind of go either way still. But then once we were underneath and we were rejecting, and then starting to roll, and then the roll, I was a little late, but still pretty confident. And then sure enough, you can just see those trend zones on top, the MACD on the bottom, except for the 8 down the bottom there is not quite in alignment. But yeah, that thing then just fell off. And I said, well, look, I got stung this morning by not getting my TP line hit by within 1 pip. So I just put that thing just above TL to make sure it was going to get hit in case it bounced like concrete. And sure enough, it just sliced straight through it this time. But yeah, so that's that one.
Oh, by the way, keep a lookout for these over here. When you in a trade like this can be a valid entry signal. So here we are on the 1 minute. This is a 3-minute trend zone crossover. And that, if it was with trend, that would have produced the sell signal on the 3 minute. So if we went to the 3 minute,
look at that. The 826, that probably was
the sell signal. So if you're trading on a 1 minute chart, when you see these things all go red, that's often the sell signal on the 3 minute.
So click to it.
Click the 3. We would have got it over here anyway. It would have shown up as a sell over there.
Yeah. I'll just click on the 3 minute and you can see what it looks like. Yeah, Vic is saying I just had to trail my stop loss in the same gold trades. There's a picture. I just haven't clicked it. So just highlight it. Yeah,
826, 24, 25, 26.
Somewhere in that 3 minute zone.
Yeah.
So yeah, hopefully you guys are starting to click with that. When that crosses over on, that's, when you see that zone cross, that's it. You can even see the potential signals firing without even seeing them. But now we have a signal column.
And look at this wonderful pullback into 8 time frames higher, getting some liquidity there. And after that, look at that, all those red candles coming down.
Very, very cool. Okay, I'm going to cycle back to the top so we didn't miss any. So that was trade management question, hopefully answered there with Mark. I know he's got to go now anyway, so that hopefully worked. I think I rolled too high. Let's see. We got time. We're having fun tonight, and this is the main thing: is helping everyone really grasp all the bits and pieces. So, no, too high. How would you trade the current? Okay, no. Oh yeah, that might be. I don't know. If I missed any of your questions up above, I mean, Mike was then commenting the histogram color, the volume, etc. So we kind of answered all of that in a roundabout way. Compression, yep. Coming lower. Yeah, okay, so now we're up to where we are. So, Joseph, when you see the 15-minute break 4,300 south on gold, for example, now, would that mean a sell on breakdown south? Would the take profit target be estimated from the 15-minute chart, say next major support? We'd have to do a full-blown analysis, bro. I guess the same rules apply to all of it. How do I say it's and I don't really take 15-minute signals on their own sim. I always try to launch from as low as possible. And then if I see confirmation, for instance with gold, we just had a massive double top. So right from this morning, I had a buy last night, which I just got wicked out of, unfortunately, which would have run like crazy overnight. But anyway, got up this morning, got wrecked a little bit in the range, and then looked at it and I thought, this thing is going to roll. It just wasn't that all that range around the top was potentially offloading a little bit. And then sure enough, during the day, got one of those big drops, and then it just kept going sideways. But if you zoom out, Dad, or even further, or even just do that, just compress, scroll wheel, because now you can see the big double top, right? You've got all that on the left, and that new all-time high that shot up this morning was only just. That's pretty much almost like a liquidity, like a little stop hunt spike. It wasn't like a giant new all-time high. It was just if it wasn't an all-time high that we were looking at, I would just say that's a stop hunt and it's probably going to go the other way. So big double top, that was my big bias structure looking at this thing going, okay, if we get some trend line breaks in here and a bit of a safe entry, this thing could roll over pretty significantly. But to answer the question about the 15-minute break, I don't quite... I mean, I don't know what you're looking at right now. Data, so that's 15-minute chart.
Yep.
4,300. So that was, okay, so you're kind of, we're in that zone right now. Would that mean a sell on breakdown south? Would the take profit target estimated from the 15-minute chart say a major support? I don't know. I honestly wouldn't give too much weight to a counter trend signal target as such being something for support. I would just look at that 233 right now and go, okay, we're bouncing on a line. Either we're going to bounce off it or we're going to slice through it. That I'm just trading this as it comes. And once a signal fires, like a counter trend signal, or even a buy or sell signal, those lines, the target lines, they're just projected potential targets. You don't have to follow them like rigidly, but I'm not going to place much more weight on that line. Like it's not a key level. It's just a line to aim for, so to speak. But I'll place more weight. Like I look at that TP line there and I go, all right, well, the 233 is not too far below it. Unless there's other things between them on lower timeframes I can't see on this chart, I would probably actually just put my target on the 233 and believe it's going to potentially go lower. The stop loss on that one looks like it actually got hit. That pullback came back higher in liquidity. And that'll often happen with the counter trend signals, guys. They carry way more risk.
I mean, I would never take a signal.
No, and it might have been in a slightly different place when it fired because they're dynamic. But yeah, I'm not going to place weight on like the random. I guess the lines aren't random, that like TP lines and stop loss lines, but I don't treat them as like support or key level lines. I hope that answers the question, bro. Let me take profit out estimated in the 15-minute chart. Say next major support. Yeah, next major support right there. It's pretty much sitting on it. That on terms of the 15-minute chart, it's inside the 8 times higher zone. It's sitting on the 233 in a bullish market.
Yeah, but it may not break.
Yeah, trend line as well. Like that. There's some support. Obviously, the MACDs are looking pretty red. I mean, the 8 times higher
hasn't crossed
yet. So that's and look, another thing to note, they're still above zero. So the 3 times higher MACD is red, but it's also above zero, so it's actually still kind of bullish. And yeah, it's obviously red, but we're still above, like we're not deep down below. So there's still, trends can go on and be a bit more irrational than we like. There's not, in a normal trending market, pulling back to the 233, that could be a perfectly normal spot to bounce and push back up and go for an all-time high from, potentially. It just, gold's got a whole lot more narratives obviously around it right now with banks falling over and things. So it is definitely bullish in nature. But yeah, hope that kind of answers that question, man. That's okay. We answered Marcus's ones. Then after that, follow-up stuff. Vic is saying he promised he listened. I love it.
Thanks, Vickers.
They aren't saying for Bitcoin, sell. All right, Dad, you want to pull up Bitcoin at timestamp 1412 on the 3-minute chart? Okay, so today I'm sure you're on our time zone. 3-minute chart. Would you expect the TPs to repaint at 1648 where the candles really start moving down and just overshot the original TPs? I stayed in, but nerves. Okay, cool. So I don't know if you caught that. 1422. That sell signal up there. Yep, there's the sell signal. So those TP lines probably were not too far away from the teal, I imagine. I don't know where they were exactly. But what we were saying is,
look at the setup. That's a good set. Although the zone would have been orange here, the zone alignment.
Because of in between those moving averages.
Look at the 6 zones aligned. That's a real golden setup.
8 times MACD's down, the 3 times highs down.
That's a good
under
setup.
Zero, like.
And it just broke below. Look at that, it broke below the opening 15-minute support line over there. That signal there, which is very significant.
Cool. So not bright, but no, is it bright? No,
it is bright. Yes, it is.
Yeah, it is. Sorry, there you go. I've got bright lights in my face, so everything's a bit bright. Okay, so the question though, to just now we know where we are, would you expect the TP to repaint at 1648? So 1648, just trying to gather the, okay, so we didn't have a signal.
This happens sometimes.
Man, that's close. That's probably one candle away from being a fresh
should have
sell
given
signal.
Another sell signal. We're just one out there.
But histogram went bright red.
So you could have entered over there. That's a valid entry. The 3-minute is very accurate generally, the MACD. So you could have entered over there.
Start moving down just over. Okay, so if I put myself in that position looking at that trade at that point in time, you're bouncing around 2 major moving averages. They're very flat. Yeah. So when they're very, very flat, it's not like they have a huge bias. So if teal and pink, purple, whatever, are, pointing at 2 o'clock and they're just pointing towards the sky a little bit, then you could potentially expect a bit more of a violent bounce off them. Likewise, the other way around. But if they're very, very, very flat, they're such high moving averages, they're still going to be like concrete, but there's probably a higher chance that price can move past them if they're very, very flat. Dad, you can comment on that as well, but that's how I look at them. They're huge high time frame moving averages. So, but when you're underneath them, like you're getting a bit of range around them, but then once you've broken under, look, you're rejecting them now. Like now you've got wicks and candles that have started to reject them in that zone a few times for a while. I mean, we're on a 3 minute, so there's like 15 plus minutes of price underneath those lines. Then you've also got those higher time zones, higher time frame zones, the red and gray up above, coming down towards them. And that's when, it eventually pretty much rolled over. It didn't pull back into that zone up there, but rejected those lines and then fell over. So unfortunately, those TPs won't reprint because you don't have a sell signal. They're only going to print when you get a fresh signal. Yeah. But our goal is to obviously help you guys start to see when you would get a signal. Like you would get a signal if 13 crossed 21 right there and the MACD was the same color. That's basically that in that sense. So that's the reason why it didn't, but you held it by the sounds of it. So well done.
And it was a good trade. Well done.
You had some sweaty palms. That's real. In that case, you're just moving that stop to the healthy place and covering yourself, I guess. Let's see.
A very good setup.
Okay, so there's a picture. I don't know if I can see it accurately. Oh, wait, there we go. I clicked on it. Let's see. Probably showing us what we're talking about. Okay, yeah, that's exactly. Okay, that's from that time. Oh, yep. So all right. So those TPs at the time of that signal were pretty compressed. They weren't like stretched out. TP3 was even on the above tier.
Oh, yeah, that would have been over here somewhere.
Just because it wasn't a very violent breakout. The more explosive the breakout, the more explosive those TPs and stop loss will be spread out, which you probably can notice.
I mean, they're based on what's happening on the signal.
Yeah. I'm just getting to the next question. Okay, Mark's saying he's got to go. Tim, here we go. Good question. With the new system and more 3 minute trading, are you waiting for the signal candle to fully print, i.e. wait for the full 3 minutes to conclude so the signal is locked on, then enter? Or are you getting in during it while it's printing? I find sometimes in 3 minutes it's moved quite a bit. Okay, I know what you're saying. Yeah, it can move quite a bit. So yeah, I mean, to answer the beginning of the question, taking 3 minute trading is more conservative, and I would encourage most brand new people probably to just start there. You're going to have way less signals and have to be way more patient. It's just going to move at a bit of a nicer pace, and you're going to see less signals and be able to digest it a bit easier. And for the most part, they've got a pretty high strike rate. So Dad, you can comment on all of that, whether 3 minute in general / waiting for them to print. I mean, I don't know.
I mean, it depends on price action. Sometimes, say for this particular candle, it depends where the moving averages and the MACD are sitting on the signal. Sometimes they'll come right on the first minute of a 3 minute candle. Sometimes they'll only print on the 3rd minute, literally, just before the candle closes, suddenly you get the sell. So if the market is trending, as soon as it plots, I jump in. If the rules are met, I don't wait. Very seldom you do get caught. Sometimes it unplots. That does happen, but that tends to happen more when there's range. But generally, when it plots on a 3 minute, I mean, and it's, especially if it's bright, I jump in as soon as it plots, because the later you jump, that candle can grow over those 3 minutes. So I jump in. I normally don't wait. If I'm trading the 3 minute, I jump in straight away. Only if it's rangy, it can be risky. But if, now version 4 gives more clarity, we're probably going to have less signals plotting and unplotting on the 3 minute. It is rare, but it does happen. But it should happen less now.
Yeah, and with that, it all depends on your capacity to digest information quickly. Because I will always have the 1 as my primary. And then I've noticed as well, because I've set alerts, like I've got multiple things set up. So I've got different, I never change timeframes while I'm looking at something, never waiting for anything to load. I have a tab for a 1 minute chart, fully spread my entire screen, normal candles. Then I have another tab that's got still the 138 all in Heikin-Ashi. And I'm noticing how sometimes the signals will fire differently in real time, because I've been back into it this last few days. And so sometimes you'll get a signal that fires on normal candles, not Heikin-Ashi, vice versa. And so I'm starting to get more and more familiar with the timings of them. What was super cool today at one point was was in one trade, and then I just watched like the 3-minute signal fired, then the 5, then the 8, then the 15. I'm like, awesome, this thing's starting to move. But sure enough, then not too far after that 15-minute, it actually kind of got to the end of it. But it's pretty fun. I think the 1 and the 3 went off almost simultaneously. But if you're looking to just take them off that 3, yeah, it probably doesn't hurt to be aware of what's happening on the 1, because you're just then looking at more info. It just depends on your appetite, and then you could still have the same rules. Like you could watch the 1 minute, but still only enter if you get a 3-minute signal. If that makes sense. So that's another way to play it.
The force table gives you a lot of information. It's telling you what's happening on on either low or high time frames, depending on what time frame you're on.
Yeah. Hopefully answer the question, Tim. Can always chat about that more. That's a fun one. Wayne, your charts for this training are very clean with just trend zones showing. Would it be safe to trade without having EMAs, trend lines, and other price action lines showing your charts? You have more lines on now than when they first started. Okay, yeah. So, yeah, always with training, we definitely try to clean things up as much as possible, removing as much extra stuff just to help nail down exactly what we're focusing on. But I've also been experimenting with that. I leave all my pivots on one. So if I've got a split screen still with some time frames, I'll leave all the pivots on like the 3-minute chart. And then I'm looking at my 1, and my 1 primarily is very clean, but I can very quickly glaze and see where the pivots are, but I'm not trying to fit everything onto one screen because I've got the luxury of a big, see, look, that's obviously going to cloud things up a whole lot more. So there's lots of things you can do. You can turn on the labels, I think, and turn off the lines, right, Dad? Or something like that.
I mean, I wanted to we didn't have time tonight, but we'll do it next week. What I do is the key levels are the S3 of every, and R3, and also the S4 and the R4. So I tend
the 1s and 2s have got no lines on. I like it.
Yeah. So I've taken the lines off everything else. And if you follow price action, you'll find the dotted lines. I mean, look, I'll do some training on it sometimes. You find the dotted lines often have, you can see, often price moves around the 3 levels. So I'll talk about that maybe next week. I'll go through how to tidy your screen up, because that's a good question.
Yeah, very good.
I said to Ty, I wanted to do it tonight, but I'll show you how I'm trading now. I click stuff on and off, seeing what's relevant. I don't have everything on all the time. Because otherwise, I mean, the strength with TrendForce gives you a lot of information. The weakness is if you have all the information on, it can be a bit overwhelming. You can't, So I trade with the cleaner chart, and I click stuff on and off. I check to see, okay, there's no pivots in the way, or none of my 4-hour trend lines are on the way. Then I leave them off. So it's easy to read the chart.
Bang on.
Interesting. I said to Ty that the signals are so much stronger and it's so much easier to read. You almost don't need any lines. It's price does what it does based on how these zones interact.
Yeah. Yeah, and I really encourage you. I will very often turn off all my drawings. I'll hide all my drawings, and I'll turn off the indicator just to let my eyes look at price action and give myself a chance to recognize a pattern or what's going on, to just zoom out and see what's the phrase, forest from the trees, whatever it is. But do that every now and then. Just turn everything off and just have a look, zoom out, and give yourself permission to just recognize what's there and not be overly consumed by all the different bells and whistles, because there are a lot, but you don't need all of them. You just need what gives you enough clarity to enter based on the parameters you give yourself. So yeah, that might cut it, guys. We've gone beyond 9. And I know some have had to shoot already for different Zooms and things, commitments and whatnot, but stoked on the turnout. Let me, Dad, let's pin ourselves up here and take it by that way. There we go. We should still be both on here.
I'll unshare, stop share.
There we go. We're both on here. But yeah, otherwise, I don't think we have any final questions. That's probably that for that. That for now. We are Tuesday night. Things are moving. We'll be back as usual Friday morning with our live analysis. And guys,
look at Vainan today. Did you see what he said? That's awesome.
Yes. I just read that.
Gee, that's awesome, Vainan. Well done.
I only trade the 3-minute and very strong signals and took 900 pips today.
That's very good. Well done, Vainan.
Bang. Well done. I love it. Yeah. Very, very, very cool. I like that. Yeah. So guys, keep it all flowing in the chat. I love it. And at the same time, wins and losses. I know I'm being really real. I don't like posting about my losses right in the moment when I'm experiencing the emotion, the frustration, and the stupidity of why did I do that? But it's natural to celebrate the wins, but be as transparent as you want to. Be real. Like I guarantee we'll all take losses, and whether you post about it in the moment or later, it doesn't matter. Just do whatever you can to be able to learn. That's the main thing. And don't ever feel like, don't compare your chapter 1 to someone else's chapter 10. Like, just embrace the journey and where you are. Look back on how far you've come already. Look at the new language that you're busy learning and potentially speaking to your spouse and they don't know what you're talking about or what a purpose. But yeah, keep it flowing in the chat, guys. It's been really cool this past week having so many new students joining us and just all the chatter in there, all the wins, all the whatever you're seeings. And otherwise, we'll keep flowing through there and we'll see you on Friday morning for our live analysis. So well done, everyone. Oh, Danny, we're due to chat, bro. You lit me up with that voice note yesterday. This guy is on fire in his trading account. So anyway, enough of that. Dad, thank you so much.
Yeah, pleasure. Thanks,
appreciate you as always. And everyone else, trade safe. We'll see you in the chat. Good night.